Hi, everyone. My name is Dustin Miles. I'm with Momentum Multifamily, and I'm excited to have Bronson Hill here. He was, met him kind of from a little bit of a far, and then we got to meet in person, and he was nice enough to take me back to my hotel. So, Bronson, if you want to introduce yourself, and we'll go from there.
Absolutely, man. Great to to be here, Dustin. I know we're both in Strategic Coach, which is a mastermind group that helps entrepreneurs grow their business, which is great. Um, but yeah, no, I've been doing real estate for years, over 15 years. Bought a single family house, became an accidental landlord. Ended up with a small single family portfolio. Realized it was a lot of work. Always wanted to be financially free, but just really didn't know how to scale. And so I came across a mentor who taught me about syndication, taught me about raising money. So my background is sales. I was in medical device sales for about 10 years, and then just started, here and there, started a meetup, started trying to raise money. Now, fast forward 4 or 5 years later, we've had over 200 million in multifamily. We've raised $40 million for different real estate and also non-real estate business type ventures. And I was able to leave my great corporate job a little less than 3 years ago. So it's really been amazing to be able to open up the idea of passive investing and creating cash flow through investing and tax benefits and things like that, not only for myself, but also for other people. So really excited to be here today and talk about it though.
Awesome. And I know you said you've been in real estate for about 15 years. How long, when did you kind of make that move over to multifamily?
Yeah. So, I made the move. It was, let's see, it would have been 2018. So yeah, almost,
Mm.
I guess 5.5 years ago.
Oh, wow.
I have a relative who has been doing large multifamily for years, and he's like, "Hey, this single family stuff is, it's okay, but why don't you do multifamily?" And I said, "Well, I don't have the money." He said, "You can raise the money." So that's where I learned about syndication. And so there's that saying, when the student is ready, the teacher appears. And so that was really true for me, that I found a mentor at the right time that was really helpful.
Oh, that's awesome. That's cool. And just so everyone kind of, where are you located and kind of where do you invest and all that? What does that look like?
Yeah, so I live in Pasadena, California, so not far from downtown LA. I've been here for I grew up in Seattle. I've been here for basically since college, so for a long time. And then we don't invest in California at all. We invest all primarily in the Southeast, Florida, Georgia, Alabama, Arkansas, kind of those areas. And then, like I said, the last couple of years, we've really shifted to do a lot less traditional, kind of value add real estate, and a lot more, businesses, ATMs, car washes, oil and gas. We've done some VC stuff. We've looked at kind of different deals, even some debt funds, some other things that are more in the financial space that just provide certain things that investors need. So I always say, as an investor, you have a choice of where you invest and what you do, and if you can choose between different assets, there may be a time that it makes more sense to invest in certain types of real estate or other types of businesses. So it's just good to be able to pick and choose what you want to invest in at the right time.
Awesome. Yep. Well, cool. And then, there's lots of different roles that you can wear, kind of on the general partnership side, and kind of curious what role you like to play, and you've typically played in the syndication space.
Well, I see you got a bull in the background there. I like to take the bull by the horns and just,
Yeah.
go for it.
Yeah.
That's a great. Um, yeah, no, my goal. I just had a call with somebody earlier today. My goal really is to own everything and operate nothing. And so I like to be, I like to be in a co-GP. I like being, on a team. I like sometimes doing a fund of funds where we just raise money for something, and I really approach something, things as a passive investor. We've been more hands-on certain deals or things in the past. But again, if the goal is really scalability, I talk about it in my book, Fire Yourself, where it's the idea, if you can't 10x your current strategy, it's not really passive investing. And so my goal is to grow wealth. We were just talking before we started recording. I just got back from a trip to Nepal and India for 18 days. Last year, I traveled 6 times internationally. And so I love that, it gives me flexibility. If I'm not kind of the primary person operating an asset, it allows me to just simply, make sure things are going well, communicate with investors, find new opportunities, vet deals, and it gives me kind of some time and location freedom to be able to live the life I want to live.
Awesome. That's great. And people have, especially once LPs kind of go to, a few conferences and things like that, they meet, people similar to us that, help put deals together. Is there anything that you do that kind of sets yourself apart from other folks, or just how do people kind of start attracting themselves towards you?
Yeah, well, I have the shiny bald head, and I feel like people are just drawn to the light when I get a glow going off my head. Other than that, no, I think we all have kind of a different approach. I've thought about that a lot. Of what are the unique things that we offer? I mean, we do offer a lot of education. We do a lot of panels and
Hmm.
podcasts and different things just to try to really help people understand. Why they should look at investing. What are the reasons, and what are basically the avenues to be able to help people to get to their goals. And so, with my book that I book that I wrote that's now an Amazon bestseller, um, we've just had a lot of people that are like, yeah, that's me. I'm this corporate person. I have a business. I don't have time freedom. I don't have what I want. I'm looking to develop that. And so, just creating conversations around that for those type of people. So, our people typically we work with are typically business owners or professionals, usually age 40 to 70, that are kind of like, I want to stop doing this, or at least have the option to, but I don't know how I need to, how does my money start working for me? How can I make money while I sleep, right, as Warren Buffett would say. And so I think it just, when you're able to do that, it really allows you to have the freedom to work how you want. That the other part of that quote is, unless you learn how to make money while you sleep, you'll work until you die. Well,
Hmm.
ironically, Warren Buffett is 93 years old and he's still working, right? But he talks about tap dancing to work and doing it kind of on his own terms. So I think for investors, it's a really empowering place when we can know that we don't have to go to work. Or if the bosses mean, we can say, well, I don't want to work here anymore, or I want to stop working in the business, or just to be able to find ways to grow cash flow without taking up more time.
Awesome. When you're looking and evaluating different deals, I guess if you could kind of start with multifamily, what are you looking for in a deal, and then I guess you could also answer in regarding some of the other businesses that you've invested with or in. Just kind of curious what your deal box looks like.
Yeah, I think it depends. I think these days, I mean, are you talking real estate specifically, or just in general?
Yeah, I think if you could start more with real estate, and then if you want to hop over to some other stuff, that'd be awesome too.
Yeah, so real estate, we haven't really done a new real estate investment deal, I think, in the last 2 years. Well, no, we did one recently, which is a senior housing deal that was a new development. So I think it varies. I think it depends. People say, well, they ask sometimes, how's the real estate asset, or how's the real estate industry? And it's like, well, what do you mean, like single family, multifamily, what area, what, like, part of the country, what,
Office,
commercial,
retail.
office,
Yeah.
retail, all the different things.
Yeah.
So I think it just depends. I think in the multifamily space, we have been a little more cautious lately, because we did get in some situations where we're in some bridge debt situations where it was really challenging. We just had trouble with managing the debt side, or even just seeing in large multifamily where valuations drop between 20 and 40%, just because of new people trying to find debt for these properties. We've seen some challenges there. So I think there's the kind of the fixed rate loan assumption thing, which is nice if you can find something that's got 6-7 years left on a longer term debt that's 3 or 4%, which is interesting. I think these days it's hard to find anything that really cash flows from the get go. Obviously, there's some value add there. I still think it is a good time to buy. I just think it's challenging to find the right deal and to get investors excited about it. So for that reason, we've shifted a bit to do really those three things: looking for cash flow, primarily cash flow. And we found in businesses, a lot of times there are business, investments, private equity, other things that cash flow very quickly, or they provide, consistent monthly or quarterly cash flow. And that's something that with real estate has, at least in my opinion, has been more inconsistent with a lot of deals, especially new deals. And then, things that offer tax benefits. There's things like ATM machine fund. There's other deals out there that are actual equipment that actually depreciate to zero. So the depreciation is actually better than real estate depreciation because you never recapture. If you sell a property in 5 years on a multifamily deal, you have to recapture the years that you didn't use versus equipment. A lot of it depreciates completely in 5 years. And so, that those are a couple things. The other one is long-term appreciation. So like our senior housing deal has been a great project that is long-term appreciation. So I think it just really depends on, what someone's goals are. And we like to kind of provide things in those different spaces so that we can offer them to investors and they can have either tax benefits, cash flow, or appreciation.
Awesome. No, that's great. And one question I've gotten from not a ton of LPs, but I've gotten from a few LPs. They're like, talk about the deal, and they're like, "Well, what should I be asking you about the deal?" And so I'm gonna pose the same question to you, and and I guess if there's something you can think of more on the real estate side, that's great, or maybe some of your other ventures. But from an LP perspective, what should they be asking you about some of these different deals that you're in?
Yeah, so it's a good question. I think in general, I have some stuff in my book where I talk about some of the questions you can ask and even how you vet a specific market, an operator, and a deal. But I think a few big ones are, tell me about a time something didn't go well in a deal, or how did you deal with it? And if they don't have something to share, or if they hesitate, it could be that they're inexperienced or they're just not being fully forthright. Because as you know, every deal has challenges. Every deal has things that you learn. There's growing experiences
Yeah.
there for sure. Those are good questions. I think a big question that I ask a lot of in any asset really is what is the primary risk of this deal? And I think as an investor, it's important that you have an opinion on that. You say, okay, well, this is the reason, this is the ways I can make money, or this is how I'm going to make money. But what are ways I can lose money? And if you don't understand at least one or two or three ways you could lose money, you probably don't understand the deal well enough, because every investment has risk. Every investment has things that can go wrong. So trying to understand that. And then so I kind of get what I think the one or two primary risks are. And then I'll ask an operator, I say, hey, what do you think the primary one or two risks are? Right. And I'll see if it kind of matches up. And sometimes they'll give me a different
Mm,
answer I even thought of. I'm like, oh, I didn't even think of that about that. So I just think it's good, kind of eyes wide open going into a deal. Obviously looking at, is this operator, maybe they're great in multifamily, but this is self-storage and this is a new project, something new for them. So, is this kind of fit their wheelhouse of what they've done? Or is this kind of a speculative deal? It doesn't mean you won't do it necessarily. Just make sure you understand, how this fits in with who they are. And then I used to think as an investor and as a partner that we all have kind of the same goals, right? We all want to do deals. We all want to communicate well with investors. We all want to have this long-term partnership. But I've realized a lot of operators, they just look at investors as their dollar signs. They're just going to raise the money and they don't
mhm.
want to communicate. They don't want to kind of have this long-term relationship. And I think it's a short-sighted way to go, but there's a lot of people that operate that way. And so I try to
Yeah.
just think about, those are really values questions of, what does someone value, what's on their website, what's the feedback other investors share. So I think those are all just things, over time, if you can try to take the mystery out of it and just figure, okay, what would it be like to actually invest with this group? Ask for some of their reporting. What are their monthly reports or quarterly reports look like? And so I think those are all things that, just try to get a feel for who they are, what their values are, what their experience is, and what the risks are.
Awesome. So as it kind of relates to multifamily, anything that that you like the most about multifamily or least. I know, we got out of there's a lot of things I do. One thing I There's a lot of things I like about multifamily, but one thing don't necessarily care for, at least on my end, is we a few months ago we got K1 season. I love K1s for what they do for my taxes, but you know the all of that paperwork and getting it out and getting it to people in a timely manner is it's a chore. So but anyways, yeah, if there's anything that you really like about multifamily, or maybe not so much, but yeah, curious about your thoughts there.
Yeah, I think multifamily in general is a very understandable asset for most people.
Mhm.
People have lived in an apartment or a house, so they understand there's a need for it. I love the demand structure. I mean, it seems like we've underbuilt. There's incredible demand for multifamily. The debt situation's gotten a little wonky, and I think people have
Mm,
kind of seen that, and it's been challenging for some folks. But I think in general, being in an asset like multifamily, we know, it goes hand in hand with inflation. I think inflation is here to stay. I think it's much higher than the official rate of 3% or whatever they're saying. I think it's more like 8%. And I think if you're in an asset that hedges inflation, I think it's a great place to be. Also, you get to use debt. You typically put 20 to 40% down. And so if you get a 20 to 40% increase in the value of the property, you've doubled your investment, right? You're able to use other people's money, the bank's money, to go and go buy this asset. So I really like those things about multifamily. Things I guess I don't like about multifamily. I don't like right now just some of the the numbers. It's been challenging to find deals that really look attractive and cash flow a lot. I think between 2010 and 2020, probably, or 2021, you could kind of do anything and you were a genius because you bought.
mm.
and, uh, and things, it's that saying, another saying about Warren Buffett: you can only see who's been swimming naked when the tide goes out, right? And so it's
Mhm.
like, that we saw that. We said, "Oh, I guess I was swimming naked." And
Yep.
so I think that there are some challenges, but again, as an investor, I try to look and say, okay, I don't love real estate. I love what real estate does for me, but real estate's just one. There's different assets within real estate, but there's different choices as an investor. I can buy precious metals. I can buy a business. I can invest in oil and gas. I can do other types of things that provide other things for me. So that's what I tell people, like, regardless, whatever you're investing in, is just really try to understand what your goals are. And if your goals are tax reduction, then, or if your goals are cash flow or your goals are appreciation, just, figure out what those are. And then you can have some flexibility of what you go after based on what your goals are. So I think it's like it gives you a few more tools to use if you're, not only limited to multifamily, or if you love multifamily, then it's great. And I think it is one of the most, if you do it right, it's one of the most stable asset classes you can get into.
Awesome. Yeah, totally agree. I actually syndicated my first deal 10 years ago this month.
Okay.
And it was very much you put two-tone paint in, and you put in some vinyl flooring, and you raise rents 150 bucks.
Yeah.
And then every 6 months we'd raise rents $50. And that's how it went for years and years. And we bought it. It was, walking in cash flow was 8 to 10%. And then we're buying it like a 9 or 10 cap, and then ended up selling at a 6 cap, and like I said, looked like a genius. But yeah, gone are those days, and it's definitely a lot of work for sure. So, um,
Yeah.
are you yeah, I guess kind of going back to when how you started and all that, did you get into a mentoring program? Are you in, I know you said you're in strategic coach, are you in any other mentoring programs right now? What is kind of your the mentoring side or coaching side, what does that look like for you?
Yeah, so I didn't join a mentoring program initially. I just kind of found, I started a meetup and just trying to add value locally as much as I could. And then I basically found somebody who was really successful and just said, "Hey, can I help in this area of raising money?" And they're like, "Yeah, let's do it." And so I found a great partnership, which I think is a great way to go about it as well. But I think there's different ways to do it. I'm in strategic coach now. I'm in a group called Entrepreneurs Organization. I just joined another one. It's called the Purpose Company. They really help you, basically get paid speaking gigs and kind of develop offers and just create things around your business that can really help you grow. So I always think it's great to have coaches. I mean, you look at even professional athletes have coaches, right? So having
Mhm.
coaches in your life, I think, is really valuable to be able to have different areas to be able to grow. So yes, I'm in a few things right now. I'll probably have to see this next year if I'm going to pare down some of the stuff I'm doing. But I've really enjoyed being in it for sure.
Awesome. Do you have any favorite books, podcasts you like to share? Obviously, you have your new book, Fire Yourself, which is a great title. But
Thanks.
yeah, love to any books, podcasts you want to mention.
Yeah, so I love a lot of, actually, in the strategic coach vein. I like all the Dan Sullivan, Ben Hardy stuff. The 10X is easier than 2X is a great book, just a great mindset that he says it's, if you're growing a business, is it easier to double the size of your business or to 10X the size of your business?
Mm,
And most people would
yeah.
say, well, it's easier to double. And it's like, he's like, no, it's actually way harder. You're harder because if you work 40 hours a week, then the thinking is, okay, I just need to work 80 hours a week now. And I just need to do twice what I'm doing. But 10X, you've got to let go of a lot of the things that you're doing and think in terms of scale. And so I think that's just that principle is really valuable when it comes to just your life. Like, how do you want to live your life? And if you're going to scale up, you do need to kind of let go a lot of things you're doing and be willing to become a different person than you've been. So I think that's something that's really important. I don't listen to a lot of podcasts. I have one for like just faith stuff. I listen to the Daily Audio Bible podcast, which is kind of like a little
Mm,
just daily Bible reading one that I do. I have some kind of inspirational stuff that I listen to as well. I listen to a lot of audiobooks. One of my favorite books is Never Split the Difference by Chris Voss.
mm,
That's a former FBI negotiator. I got to have lunch with him once, and
mm.
just great, just some great tactics on how to interact with people. It's not about manipulating people or taking advantage of them. It's just trying to find a way to get to win-win and really helping, making sure you understand people and what's effective negotiating. So I think that's a great book. I try to read that book every year.
Awesome. Uh, in terms of, if you want to be more near term or 5 years out, but kind of where do you see yourself in, later this year or in the next few years, however you want to take that?
Yeah, well, I hope I'll still be traveling and having fun and exploring and creating books and resources and things like that. I'm kind of waiting to see. I think we want to continue to try to create more things in the investing space. We're doing some stuff, some debt products in real estate right now, which are really interesting. So I find it has a different risk profile than a lot of equity positions. And then also we're looking at stuff that is uh, a little more in the VC space. That's like,
Mm,
okay, maybe there's a 50% chance it goes to zero, but there's also a chance that it goes 10X or 100X, right? So if you have a number of those investments as a high net worth person, you only need, one of them to really do well to actually have a win. And so obviously you got to be selective, and there's a lot of things people do and they can get into, but we've kind of liked some of the stuff that's just a little bit different that nobody
mm.
else is offering that we can bring that gives us, I guess that's kind of somebody of unique advantage, saying, hey, we have deals really that you can't really get anywhere else, that we found that it can really benefit a lot of folks. So yeah, so it's it's been fun to watch and to see and continue to develop. And I don't know, we'll see where I am in the next 5 years and what
Okay.
I'm creating, but I'm hoping to definitely create more and more.
Cool. And any advice that you would offer to someone that's looking to be a GP, in the multifamily space, or maybe even oil and gas or some of the other businesses you're involved in?
Yeah, I mean, I think the biggest way, the biggest investment we make is in our own education.
Hmm.
And so I think just being willing to learn, being willing to look at different things. I'm up for investing in things passively, even if I'm unsure how they're going to go, just because, as I invest, I learn, I keep an eye on things. Some things turned out phenomenally well. Some things, okay, maybe this isn't the best investment for me or for bringing to my investors. But I think, it just, again, it's really committing to the process of, what do I need to do to keep growing. And
Hmm.
obviously, as somebody who's a learner, who's an investor, nothing is wasted if we learn. And so I see sometimes investors are like, "Oh, this didn't go well, and therefore, it's a failure. I'm a failure. I'm no good at whatever." It's like, well, no, like that was. I don't think that's really the point. The point is, what did you learn? Because if you
Yeah.
learn along the way, and I've just seen sometimes people want to delegate. Oh, I trusted this person, and therefore, they let me down. And it's like, well, no, maybe there's some learning there too. You like the deal and you invested in the deal, and I think there's some learning there. And so I think if we allow ourselves to really enter in that space, it really can make us a better person and open up kind of new opportunities in different areas of life.
Yeah. Yeah. For sure. What's the saying? You win or you learn. So.
Yeah.
Uh,
It's a success or it's a seminar, right?
yeah. Right. Yeah. Well, cool. How do people get in touch with you? What's the best way to get in contact with you?
Yeah, awesome. Thanks for having me, man. This has been great. I have my book, Fire Yourself, which is on Amazon. Replace your working income with passive income in 3 years or less. It's an Amazon bestseller. You can find that anywhere books are sold. Or you can go to my website, bronsonequity.com. We've got our investor club. We've got a bunch of free giveaways. We'd love to connect with anyone about investing or just people's financial goals. So, but I appreciate you having me today, man. This has been great.
Awesome. Yeah, thank you very much. Great seeing you as always, and look forward to hanging out in person soon. All right, thanks, Bronson. Take care. See ya.
Thanks, Dustin. Appreciate you.
Bye.